good crowd. So I think we decided we were going to change the topic of the discussion and just talk about Cybertrucks for 30 minutes. Does that sound good?
Excellent.
Yeah, I'm all for them. I think Elon Musk's new Cybertruck is like the next VC trend. All on it.
Absolutely. Please start.
Oh, your thoughts. Did you see it? Did you see the Cybertruck?
I did not, but I'd love to hear what you thought about it.
You've seen it.
I have seen it.
I've already tweeted about it.
Yeah, it looks like a combination between a warthog from Halo and the Kobe 2 basketball sneaker.
It very much does.
Didn't see it.
Yeah, it is definitely how we envisioned the future in the 80s.
Back to the future.
Yeah.
So I guess we could also just touch on a little bit in terms of what either of us are seeing in the markets right today as far as it comes to Europe, but also generally in venture capital. What excites you today? What are you excited about?
What's exciting me? Yeah, so I spend a lot of time in highly regulated industries. So I think when we talk about frontier technology, which has definitely gotten a boost in the last 10 years because of low interest rates and a lot of capital being able to be put to work, there's two places you can put it. You can invest in the Oculus, like the type of company where you have a visionary founder who's thinking of a new technology and trying to create a market, or you can invest in SpaceX. Legacy market where it's dominated by a few incumbents and you really have to push through regulation. And I'm actually most excited about the latter. And part of the reason for that is because I think the market size is usually larger. A good indication or a good proxy of whether a market is actually large is whether Washington or nation states are regulating it. So I tend to spend my time in regulated spaces, aerospace, defense, computational biology, and areas where I think we can put a lot of capital to work but see incredible outcomes because the scale of company can be much larger. What about you?
I mean, for us, so I don't spend as much time in those areas.
Yeah.
I'm equally, I think a bunch of the companies you're I think a lot of people ask about what's going on in the startup market. And I think in reality, for all of us in our lives, there's no startup market. It's a market of individual startups. And each of us at Sequoia make 0 to 2 investments per year and try to find really special companies wherever they are as early as we can.
Yeah, I would agree with that. I mean, I think especially because, as we all know, I think teams and developer talent is becoming very distributed, right? And the remote working model is becoming very popular. It's exciting to be able to find companies in very far-flung areas of the world, right? And I spend a lot of time looking at like developer-led technologies and open source, and I find that some really great teams, you know, they don't have to be in San Francisco or New York or any major metro area. They can just be an 18-year-old who had an idea. And so I like that there's a little bit of sort of opening of access, right, to the startup environment and that anybody can do it. And that makes it fun, but makes it harder to cover as an investor as well, which is fun.
Yeah, I think one of the things on the far-flung places topic that I find interesting as a San Francisco-based investor at a conference in Finland is so many of our companies now seem to span the US and Europe, and I'm curious to get people who have European backgrounds take on this, but we have, you know, the companies I work with, 2 of them started in Europe and now have people in the US. 2 of them started in the US and now have development teams in Europe. And I think it's quite clear that the market they're going after are global. And the combination of remote work plus the European and US kind of connection, I think, is a pretty interesting topic for this.
I'm European. I was born and bred in Lithuania, studied in Germany, lived in France, and been based out of London for the last, 10, 12 years. One of the interesting bits about Europe, obviously, generally speaking, is there's more developers in Europe than there are in the US. Just objective fact. They're more federated and distributed across the continent, obviously. So historically, it has made it a little bit harder for Europe to compete sometimes. On the tech side. However, now with distributed workforce, like just the collaboration tooling that's in place, also the rise of open source as well, that's fundamentally is very complementary to the structural sort of nature of European developer ecosystem. You start seeing really, really exciting companies emerging from Europe, benefiting from all of those trends. We just were fortunate to invest in a Swedish business actually. Just a couple of months ago, a company called Grafana in server observability and monitoring space. And although we call it, dual headquartered between Sweden and New York, I don't know that there's more than a handful of people, in either of those markets. It's a really, really distributed, and phenomenally effective organization as it is. Never raised money before, basically. Now it took, just north of 20 million from us at Lightspeed. But it's just a good example of how I think with evolving technology landscape, Europe is emerging as winner in those areas that maybe a few years ago would have been sort of, less the case. So there's a lot of exciting things happening, in Europe and about Europe, but, it's just one of those trends that is quite exciting for me personally. So we keep looking after those, distributed teams, open source models, emerging from anywhere in Europe. It could be very far east, or it could be south, or it could be, north, in that sense.
Yeah. And I would love to hear, Crystal, your thoughts on, you spend so much time in infrastructure, clearly understand open source, and it seems like open source has given way to this distributed team phenomena that we've seen in the last few years. I'd love to hear which products you think are really giving way to it and why it's become something that every team is considering when they found a company.
Yeah, you mean the usage of open source or building open source as a company?
Or just it seems like that ethos and that style of work has permeated a lot of companies. And I know, we all have companies in our portfolio that are fully distributed or semi-distributed. So would love to hear thoughts on why that is. Are there certain products that have really given way to that? And whether we think every team in the future is going to be fully distributed.
I can chime in on that. I think on my view on why that has happened is first it started with just the increasing power of the developer as a decision maker, and that is also tied to the fact that there aren't that many in the world, right? And so they can have the privilege of being choosy with their jobs and being opinionated on what stack they use and where they work, and so enabling them to self-adopt, right, and sort of use free solutions, be very opinionated on what they use in their stack, and flip a credit card if they want to, use a cloud or premium version. I think that was initially what was driving sort of this Cambrian explosion of open source, and then that feeds onto itself, right? And that then it's okay to have pockets of people, working what they want to work, doing what they want to do. Companies can be built anywhere because those ideas can arise from anywhere. So it's sort of the cycle that feeds on itself. But I think it starts with the developer kind of becoming more influential with regard to IT decisions. Mm-hmm. Yeah.
Yeah, the first investment that I made at Sequoia was in GitHub, which, two topics. Number one, obviously, you could see just in the data, where the open source commitments were coming from, and Europe was already big back then. And number two, that was an early distributed team. It was mostly distributed from the get-go. And if we look back to 2013, 2014, when we got involved, the tooling they had inside the company was, by today's standards, very weak, and trying to run a business like that was super complicated. And if you look today, one of the companies I'm involved with is called Figma, which is a similar model been set up for the developers as for the design community. And both in terms of the ability to power remote teams, number one, and number two, to take kind of the same open source concepts, which have long been present in software development, and bring them to the design world, which they just announced the Figma community a few weeks ago. I think it's an amazing opportunity, and that's one of these companies where it's similarly San Francisco-based company, no people in Europe, and the usage in the continent here is extraordinary. So these companies that start wherever they end up can be scaled globally.
Exactly. It is important, though, that it starts that way, right? As you said, it's distributed in the DNA, basically, right? You can't become a distributed company once you've scaled to a certain size. Just not how it works.
Yeah. No, we've also talked about some of the macro effects here, which is no one wants to live in the most expensive cities in the world anymore. People want high quality of life, and it seems like also our generation is very eager to live in multiple places. And so it does seem like it's a generational shift that kind of is coupled with a tech shift as well. Mm-hmm.
Yeah, definitely. Yeah. Would you guys be interested in talking about what's cool in consumer these days? At least a little bit, so we don't get too enterprisey. Yeah. Andrew, any thoughts?
Yeah, consumers, I think, is still interesting for all of us because the market cap attached to consumer is enormous, and you have Amazon, $230 billion of revenue, growing 30% last year, right? The market's very, very big, quite obviously, and trying to figure out, number one, what's the why now for some of these things, and for us, some of the interesting trends around fintech, I think, is one where we've been very active, and I'm involved with a company called Robinhood, which, again, U.S. company, just yesterday announced that they're opening in the U.K., which I think if you're based in the U.K. and you're interested in stock trading, Robinhood is by far the best product, and it's going to be amazing in the U.K. That's one area we've been focused on. I think, obviously, the rise of e-commerce is still in the early innings. And it's also one of these things where, every country, particularly in Europe, is different. So I'm involved with an online travel company in Berlin called Tourlane, which is kind of taking a similar approach to what Compass did in real estate in the US to the travel agent market here in Europe, and it's going to be a global company too. So,
excellent.
Yeah. I think for consumer, obviously, it's an interesting space for us. And I think we have two kinds of, workflows that are active in that. One is trying to find what's next in terms of a platform shift or a paradigm, right? And so I think, we've had people talk about, is it avatars? Is it like virtual social communities? Is it AR, VR? There's a lot of research trying to figure out what is the next platform, if there is one, right? And understanding that platform shifts drive a huge amount of value creation, but there's not necessarily very clear signals of what that is at the moment. And then there's the other thread, which is there are established models, but potentially new regional winners, right? So actually being in Europe, I find that every country I go to, I might use a different ride sharing or food delivery service, right? And there's actually quite a lot of fragmentation in local winners. And there's still a lot of, return to be made finding the right local winner, but it takes more of a different thought process around like who has a true moat, right, and a competitive advantage. And so we think about both sort of established markets, new winners, and like new markets, new platforms. Yeah.
What is also exciting, I guess, is, we are in Finland today, and, this is a country that has produced some of the largest outcomes really in, consumer world, so to say, right, in tech, like globally. Supercell being one, Angry Birds, Rovio. Not that far away in Sweden, Spotify was born as well, right, some years back. And I think in some of those cases, gaming being the more obvious one, the market size and the opportunity is obvious. In some others, like with Spotify, it wasn't obvious initially, right, for a lot of people that music subscription as opposed to ownership is really the way the world's gonna look like. And I think that's what's also exciting for me in consumer is if you can really dig in a little bit to your point, like what's the next wave, what's the next shift, and that shift may be like just a fundamentally different customer behavior that's going to evolve over the next 5 or 10 years. And if you spot the early signs of that, then I think you arrive at a very different conclusion as to the overall addressable market that the company has. So if there is this just insane love for the product, from the customer, very high repeat rate on the product, very high stickiness on the product, and you can spot that early on. And it's not like a small market. Chances are this could look very exciting. Obviously, ride hailing is like a nice example as well. If we think over the last few years where people got it really wrong in terms of market size. Not everyone, not all the time, but a lot of people, a lot of the time got it wrong. In terms of the addressable market. So, to your point, very large market caps, very large addressable markets, and in some places that's clear where it is, and in others it is less clear. But I think if you, dig into the customer behavior, see some early signs, it can be a really interesting ride. And so I'm sure that's why you're in, Tourlane and some of the other things, right? It's like big as it is, and then, segments of it can also be like fantastic.
Yeah. The other thing, and I don't focus on consumer, but I was shocked this week to find out that Kylie Jenner sold half of her business for $600 million. And I think it shows the power of the influencer community now at its height. But
I'm only 5% of the revenue.
Oh, I'm sorry?
I'm only 5% of the revenue.
But it shows, I think, that people can build independent businesses through Instagram. If you are a celebrity, you can get this incredible reach. And I think that's something that's probably going to continue. Another thing, and I know you're an investor in a company called The Wing, I think we're also seeing the rise of very mission-driven consumer companies where people will rally around a mission of a consumer brand, almost like it's a political cause.
Yep.
And you kind of see this kind of movement first, and then a business second, which certainly happened with the
I think one of the things that I got here yesterday, so I'm by no means an expert on Finland, but I did my honeymoon in Norway 2 months ago.
Oh, wow. Congratulations.
And thank you. The consumer interest here in climate change is, I think, amazing. And I think it's a sign of what's going to happen to the rest of the world. And I think that's one area where, to your point on mission-driven companies, I think for a long time people thought about clean tech as a science thing. And I think increasingly clean tech is a consumer problem.
Yeah.
And I'm quite sure that in the next 5-10 years there's going to be a couple of like really powerful consumer brands with that as the centerpiece. I think Tesla's probably an early one.
Yeah. Yeah. What are the most interesting business models around that you've seen recently on the consumer side?
Oh, this is like, for us, there is we have a seed investment in a company that's allows consumers to figure out what their carbon footprint is and offset it. And I think there are various things like that on the pure consumer app side that I think are going to be pretty powerful.
Yeah.
Yeah.
I
think one question I have real quick for you guys, I think the topic is, VC and the future of VC. I think, at least for me, Sequoia is 47 years old. I'm 29, right? Like it's trying to figure out how to carve, your own strategy in these larger firms, in these more storied places. Like, I don't know, I'm sure there's some investors in the audience. I'm curious to get your guys' stories on, your strategy and having your own philosophy in the midst of a very large firm.
I think part of it is geography. It's interesting because when I was soliciting advice from established general partners, a lot of the advice I got was be like a local player, do a bunch of deals in the same city, develop a talent, network, referral advantage. And I think in certain cities like San Francisco, New York, and London, and quite a few European cities, it's hard to do that, right? Because those markets are quite competitive and probably pretty saturated. And so I've actually found that people of our generation have done well going to other geographies where people aren't going, being willing to get on a plane and actually go see somebody in person. And I actually found that not taking that advice has been really additive to my career, actually. And so I always try to take advice from 10 to 15 years ago with a grain of salt and try to do the opposite within reason. Yeah.
Speaking of advice from general partners we respect, I remember one general partner told me when I was first starting out that investing is more like a multiplayer strategy game than it is like actual investing, which means you have to constantly be iterating on your strategies and trying to keep up, but especially if you're a young person who's competing against someone who has a very well-known brand. It's kind of one of the exciting things about what we do is that anyone can win at any time, much more like a game than like investing. And so for me, I've always been focused on going to the places that no one wants to go, not necessarily literally in terms of geography, but in terms of sectors where either there's such a stigma against investing in it because you'll never get a good return, or a founder has a really quirky idea that no one thinks will work. I always think that because we're young and we have the benefit of time, we can do more research, we can spend more time really digging into the kind of narratives that people have dismissed, and that's been very fruitful for me as a young investor.
Yeah, to quickly add on that, we've been talking a lot about this PayPal Honey exit, right? And I think every firm probably saw Honey and thought, oh, the public comps for coupon companies are bad, so we shouldn't do this investment. And now everybody's thinking, man, we were stupid, right?
Yeah.
So you have to be contrarian.
That is a very good point. Everyone looked at the coupon companies in their portfolio and said, let's stay away. So,
yeah. So I'm probably in exactly the same camp as what you've described. I don't have any particularly smart strategies other than that I'm from Europe. I ran a business in Europe. Been here, for more than 12 years investing or running businesses, and I love Europe to bits. And so, I'll happily hop on a plane and show up in Slovakia, with half a day's notice if that's where I think something interesting is going on. So that I think is definitely its advantages. And our business of venture capital is fundamentally a network effects, driven business. The more you do something, the more you see of of similar stuff, and that's just how it works. So I don't know. Maybe there's smarter ways of doing it, but your question was our strategy. So do you have one as well, or?
Yeah, I think part one is like learn from history. I think like there are common principles that I think have held true throughout the history of venture capital. And I think studying the history of venture capital and appreciating, quality of early teams, the importance of not just a good idea, but companies focused on building a strong culture. Mike Moritz, who's I think giving the big, keynote talk later today, he was obviously still around when I started at Sequoia in 2013, and he. I think his ability to, he did the seed in Yahoo, and he did seed in chip companies, and then he did Instacart and Stripe, and this like the ability to not just do companies across generations, but like across different sectors and across different economic cycles is astounding, because I think a lot of people think about venture capital as being super deep on particular topics and markets, and if you have a really uncanny nose for quality of founders and the ability to help them build great companies, like it doesn't actually matter as much, and I think that's been shown whether it's Arthur Rock or Don Valentine or John Doerr or Mike Moritz or whoever else. I think it's flexibility mindset, focus on culture, and great founders.
Yeah. Speaking of Mike Moritz, one of the things that I think is so interesting that's happening in venture is he was a former journalist, I was a former journalist, and I think maybe 10 years ago, if you looked around, you would have seen many investment bankers. You probably wouldn't have seen people in product. You probably wouldn't have seen former founders. It's really changed in terms of the types of people that can work in venture capital. And I think that's a great thing because it means that we're going to be investing in different types of companies. People come at it with different perspectives. At our firm, everyone comes from a different background. We have former founders, people who are traditional investors, but then also people who came from the art world or the film world. And I think that makes for different types of companies that are built. I don't know if you've seen that in Europe particularly.
Well, in Europe in particular, I think the early generation of venture capitalists, pretty much all came from investment banking backgrounds. Nothing wrong with that. I had my stint as well. Several of us, done that too. But I think that was just the prevalent theme. So, you were smart enough, so to say, as a banker, and then you went on to do venture capital without really knowing how to operate or even thinking thoroughly how to do that. So that was the more mathematical, maybe more financial, maybe more dry way of doing venture capital. Also the more conservative way, perversely, of doing venture capital for the longest time. And then it wasn't really until about 10-ish years ago in Europe, I think, that you started seeing a slightly bigger exit starting to happen. People make some real money and then come back and reinvest in the ecosystem. And that's how some of the more prominent venture capital firms that are fundamentally European have been born. Including Atomica, including even EQT Ventures, several others, Balderton, with Bernard, with Business Objects founder or CEO, and so you start seeing this change dramatically in Europe, and the diversity of perspectives is now there, and it wasn't just some years ago, definitely. And that's a good thing. I think overall Europe has seen a fantastic run over the last few years, and I do think that to a large degree that is because the ecosystem is a little smarter, a little wiser, a little better rounded, so to say. And then you look back, I mentioned this number yesterday at our another panel, but if you look at the top 5 venture-backed exits last year globally, number 1 and number 2 are companies from China, number 3 and number 4 are companies from Europe, and number 5 is China again, right? So US is not even in the top 5. Again, not to say that this is, representative of the overall asset class, but just a nice little tidbit that Europe's really come of age. And, when you have those 20 billion plus, IPOs, the Spotifys, the Adyen's, the likes of those, it's inspiring, and it creates wealth, and it generates the ecosystem's velocity, so to say. So, that definitely is true, and it is happening in Europe.
Yeah. One question that I had, since you're full-time in Europe amongst the 4 of us, I've noticed that within the last year, especially, a lot of larger U.S. funds have been very aggressively coming out here, right, and trying to invest more actively and trying to hire people. And a lot of American investors are floating around, at this conference. How do you think it's affected the European investment ecosystem?
It's a great question. So I think what has been happening is that you're seeing some of the formidable funds, like all of you guys, also Lightspeed, and others, really aggressively coming after Europe, partly because Europe's come of age, right? Big exits. Governments have done generally a really good job catalyzing early investment ecosystems. Some good, early stage funds springing up as well, seeding companies, serial entrepreneurs, building companies. So is this a lot to do? And I think what that is causing is this pretty natural bifurcating effect of, the large global platform funds have an advantage, and the really specialized funds that are maybe locally focused or sector focused or, like deep tech or healthcare or whatever it may be focused, they have an advantage. And then if you're somewhere in between, then I think it's a little harder to compete. And that's especially true in Europe, where the market, is quite fragmented. So you can carve out and own a little piece of it and do really, really well, so long as you're good at it and you get a little bit lucky. I mean, let's be clear, in our business, you can be as good as you want to. You do need to be a little bit lucky as well in order to really succeed. So I think that's what's really creating it, the sort of the interesting dynamic that's been happening in Europe over the last few years. And I can only see that accelerating, right? So it's going to be interesting. It's going to be, more bifurcated, as I said, and it's going to just continue to drive the need for differentiation. If you really think about it, it's not unlike most of the startups that we back. You're either a specialist and you're excellent, or you're the platform, basically, right? If you're in between, it gets a little bit harder. Does that resonate with you guys? Like, is that what you're seeing, or?
Yeah, definitely. And I think funds, too, can take that high burn, big AUM approach or specialty approach, right? Just like the companies,
Absolutely, exactly. That's my point, yeah.
Yeah. So as we're running out of time, I always think it's fun to end on hearing what terrible ideas investors have in terms of requests for product or requests for startup. Any dream startups that you wish you could find that you haven't been able to find that you'd like to throw out there?
If we want to invest, then we don't think the ideas are terrible, right?
No, I always think our ideas are worse than what a founder will come up with. I'll throw one out. I am desperate for a new Twitter. I spend we talk on Twitter all the time. I spend way too much time on Twitter, and everything that goes viral sounds like a fortune cookie, as many have said, and it doesn't have the nuance that I'd love to see in long form. So as a former journalist, if anyone out there is thinking of a long form Twitter or something where you can really get smart engaging with people in a community, I'm very excited to talk to those founders.
I've shared my idea. I'm just so excited by the consumer focus on climate change here in the Nordics, and I think people building stuff in that space, I think it's going to be amazing.
I do think, as maybe an offshoot to that, sort of making recycling or, hardware, consumer products as a subscription, or anything that is renewable, but actually have that be an interesting business model is an outstanding question, right? So I do see interesting applications around, offload unsold inventory or trade in products so someone else can use it, and all sorts of things that are getting at that. I really hope that someone finds a business model that's really exciting also, because I think that would be very investable, but I think our biggest question on that is sort of trying to figure that aspect out and going beyond just the positive karma, like charitable, desire use case. So I think that's one. This is kind of boring, but I think someone should reinvent LinkedIn. Make it easier to discover people who are relevant to you and get in touch with them in a not transactional way. I think I'm always on the lookout for that, but I think it's very hard to disrupt, and so that's something that I'm always looking for. Yeah.
I actually think a more nuanced Twitter would probably solve the LinkedIn problem too.
Yeah, that's right.
We can team up on that one.
Yes.
I don't know. I'm excited about generational shifts, and how consumers feel about things in particular. And, Gen Z feels very strongly about things like sustainability, for example. So I just keep looking for things that tap into that, because if that continues to be the case, just entire behavior is going to just look entirely differently. And as I said, addressable market's going to change, and the world's going to look very, very different. So I just keep looking for those.
Yeah. And with
in
that,
consumer.
Thanks for joining the coffee chat.
Thanks, guys.
Thank you.